Welcome back to Tackle Trade's halftime report for July 22nd, 2022. I got Coach Frank, I got Coach Mark here, and we got a lot to talk about. Earnings roundup, journey through the skyline. We're going to talk a little bit about some charts in Frank, another edition of Frank's charts as well. I'm going to bring in Coach Mark to run the show, and me and Frank will be here to help analyze, no doubt about that. Mark, how you doing today?
Well, I didn't get my go live button. Like, you know, we went live through a different thing, and I'm waiting for the, creature of habit, right?
The new technology is scary.
New technology, and I'm like, I'm not supposed to speak yet, and then I didn't get my go
three old
live
dudes
button.
learning
Trusting
new technology.
In fact, I don't see the go live on Zoom now, and so I don't trust everything.
We're live. I'm
off.
chatting. I'm in the chat. We're live,
there, bro.
So it's going to take some getting used to.
I didn't hear the music. I didn't see the legal words, but that all of that absence of thought on an old man's part means we're ready for Friday edition of the halftime report. Friday means Frank's charts, and market selling off a little bit. Snapchat, other earnings, weighing on whatever you want to see. But plain simple fact is, when I look at this chart, and Matt, and pleasantries first, how is everyone doing this today?
Doing fantastic, and I think like you and Frankie, there was a couple minutes there of us going live today, because we are testing a new technology going live on YouTube, and all three of us are just sitting there staring at each other, wondering what is going on.
What is going on?
Is it working?
So apologize for that tackle trading, but we'll get that dialed in. But I'm doing good, excited to be here, and always excited to be here on Friday, especially on a Friday where the market's talking about a little bit of profit taking. That's a reprieve Friday, I'd like to call it there. Frankie, how you doing, brother?
Listen, other than the earnings that make me want to just like take off for 2 weeks and then come back, doing really well. I was scanning today, Maddie, and it always happens. You get to about the halfway point, and in my head, I'm like, oh, we got earnings behind us. This is going to be good to go. And then like everything I found that was interesting, I'm like, don't do it. Still a lot of earnings out there. That always makes me grumpy, right? But other than that, fantastic and excited to be here. I got a few charts to look at with the team. I know you do as well. So looking forward to earnings season being over. Looking forward to talking to the team about some charts. That's for sure.
And when you're talking earnings season very quickly, Chuck, I know we want to get to the skyline, but just to kind of illustrate a little bit of what Frankie's talking about, as we scan the markets, and we scan all the markets every single Friday as we get our scanning reports dialed in for Saturday. And when you're looking at earnings this week, look at the names that reported this week, and obviously we talked a lot about them. Tesla yesterday or a day and a half ago, Bank of America, Johnson & Johnson, Netflix. You had energy components, basic material components, and you had a couple, 2, 3, 4 stocks out of every sector report, some important, some less important. When you're looking at next week, though, Frankie, this is kind of the juggernaut when it comes to
the weeks, right?
the weeks. And for some, I keep putting this week. When you're looking at next week, look at that name. Look at those names right there. Apple, Microsoft, Google, Amazon, Meta, Facebook. You start getting into some major energy components. And so, the next 2 weeks of earnings is really,
it's hot and heavy.
30 companies, 150 companies. It is going to be hot and heavy. So, it's obviously in the middle of earnings season, and there's a lot of earnings that has came at us this week. There's a lot more coming at us next week. So it's going to be a little bit more difficult to find those very, very clean setups that don't have the volatility of earnings attached, which us swing traders don't love doing. So it's kind of in that wait and see mode. But that doesn't mean there's not good trades out there, and it doesn't mean there's not good setups. There are some out there.
They're just fewer and further between. You have to look a little harder sometimes, but there's always something out there, right? No matter what's going on.
No, I mean, just doing the halftime report with yesterday with Frank, just looking at the earnings season is going to provide a very nice watch list for the coming months. Companies that have good technical patterns combined with good earnings reports. That 1-2 combo should set up a lot of nice trades in the market in the coming months. So market selling off a little bit, Matt. the 5 EMA, and the 9 EMA, as long as markets are above these two moving averages, it's hard for me to get overly concerned with a little bit of pullback, right? Like, healthy situations still on the charts. Stocks don't go up every day. When's the last time we said that?
No, they don't go up every day. The yin and the yang, and they retrace and they flag and all that jazz. You had an interesting testing against the 5 EMA yesterday, right here. A little bit of a hard 14 test. Obviously, the market passed it. I know whenever the market sells off after a 5-6 day rally, you're always going to have a causation, right? What's that headline out there? Snapchat, and Snapchat did have down pretty big on the day, had a miss on earnings as well, and so that's obviously going to have an impact. But there's a lot of impacts out there. My take here is honestly, this is my take. I just feel like we're dealing with a little bit of profit taking as after we went up 5, 6, 7 days. I just truly just feel it's profit taking here.
That's kind of where my head went to. It's, we've not had a lot of good, solid profit taking Fridays, right? Where we had good profits to take so far in 2022. So that's kind of where my head went with it too, Maddie.
Well, and there could be some Snapchat carryover, but to win, Meta's reporting next week. And I don't even like saying Meta. Facebook is going to have far more to say about the social media condition than Snapchat will. So I think the Snapchat earnings report is going to be put in the rearview mirror very, very quickly. And I think it's quite frankly used in headlines today.
Yeah, the last time we had Snap news that freaked out the market responded that day and rallied the next 3 days. And so like on on that big gap down that you saw on May, and the whole futures market got all this and that, and then the market rallied the next 3 days. And so excuse this, that. I mean, the underbelly, which is selling off big time, whether it's Snapchat or not. I mean, it had been up like really, really healthy over the last month, right? Percentage wise. I mean, big oversized gains over the last month.
Yeah, you're talking about this area of the market up a good 12% just in the last week, and it's retracing 5%. Typically, we call that a Goldilocks retracement. I think this market's just a little bit of profit taking coming into a weekend that has a big time week next week. That's really my read on the market. And again, I know the Snapchat headlines are completely out there, and maybe Snapchat has a little bit of carryover to their earnings report, but their earnings numbers in Snapchat weren't bad. It was their commentary over guidance that really kind of kicked off a little bit of the selling here. Their actual earnings numbers in Snapchat came in at -2 versus the expectation of -2. Revenue came in at 1.1 billion versus the 1.2 billion expectation. Revenue increased 13% year over year. Not great growth numbers, not in any capacity. But I just don't believe Snapchat itself is having a big impact on the entire marketplace. I really do, because and again, one of the reasons I say that, guys, is Snapchat's report was yesterday. And when you're looking at the S&P 500 here, and again, the S&P is the barometer we like to look at in terms of market behavior. Here's Snapchat yesterday reporting. There was really no impact in the futures market. Here's Europe. There's really no impact in Europe. Europe actually sees price appreciation coming into the entire marketplace. Here's pre-market activity, nothing. Here's the cash open right there, actually goes up on the cash open. 15 minutes later, you see a little bit of selling behavior. And then once you clip this support level right there, it's really this first support level intraday you've broken since this one right here. And look at the volatility that ensued after that clipping of support. Anytime you've broken support from an intraday perspective in the market in the last 6 months, you've seen increasing volatility, increasing selling. And so I just see this as a little bit of profit taking Friday. And once you clipped support, you just saw a little bit of volatility, the same type of volatility we see when most support levels, excuse me, are violated in the market.
No, it's whatever the effects. Listen, all of those, like, that was a murderer's roll of earnings companies next week. the narrative will shift unless you're 100% exposed to Snapchat. Then my condolences. You
Uh,
got my
you
condolences.
got TikToked if you're 100% involved in Snapchat.
But technical pattern's still healthy. Technical pattern's still healthy. And Matt,
Mhm.
we're not seeing like, oh my gosh, panic selling. The selling is very concentrated in growth. When you look at the sector
Mhm.
level, defensive, even industrials, breaking even, communications having the oversized move down, technology and growth, but it's not one of those like panic sell everything days. Like when we broke
Mhm.
short-term support back in early June, you saw panic sell everything. That's not what's occurring today. It's very concentrated, feels very, isolated right now
Well,
in certain areas.
it almost feels like the area of the market that's been going up the most is giving back the most today. And that's another day in the market for me.
Yeah, no, I mean, no panic selling across the board
Yeah.
here, which is, I think, a key tie. And like I said, we're seeing in some of those areas that, been doing a little bit better, right? Small caps overperforming a little bit,
Mhm.
underperforming a tad today, down about 1.3% compared to the S&P. And so it really is, like you said, it feels very much if you've been overperforming, you're giving back today, but not panic in the market as a whole. No, we got a lot of stocks to cover in earnings. I mean, Frank and I spent what, good 45 minutes on earnings alone yesterday, breaking it all down. So let's
Mhm.
fire through the skyline here. Crude oil, still holding this little support level. And, Frank, when you look at, you talked about the support level yesterday, and you mentioned that, like, listen, if I was looking to go long on oil or whatever, this is what you wanted to see. You wanted to see a comeback, come down, come back down again. Give some time for it to, like, work support here. Let those moving averages come down. Wow, what are you seeing today?
Yeah, exactly. They've been just one step further, right? You still have to break that resistance zone, in my opinion, before you get any, green lights at the earliest, unless you're playing the pure support bounce, which I think you probably should have done that last time on the first test and not the second, personally. But holding is good, and this is such a big zone, right? And so I don't think it's surprising that it's fighting here. I do think it would be really productive if we are able to kind of cook in this zone going into next week, create that technically speaking higher low, ultimately, like you said and mentioned, have those moving averages kind of flip a little bit, particularly the nine start smiling, take out that resistance. Sure, you're going to have a lot of stuff on top of you still, right? It's going to be one of those type of developers if that's the way it goes, but I think that's what you want to see if you're a bull. I still think you have to take out that resistance level to get confirmation on this support, unless you are super aggressive and just kind of blind buying at support, which is just not my style.
Anything to add, Matt?
Yeah, I think crude oil is setting up fairly constructive, quite frankly, and I think you're doing that right in front of some very important earnings coming out of the energy space. And I also think that we need to be looking at this crude oil bounce a little bit more closely over the course of the next few days to see if we can get what Frank talks about with confirmation. If you'll remember, this is what we've been calling for in energy itself. Crude oil obviously secondary, but we've been calling for a little bit of slowing momentum at the 200-day moving average. We've been calling for a little bit of more constructive price action in the energy space and for crude oil to start settling down a little bit. It's been hot and heavy out there. And, over the course of the last couple of weeks, you are seeing a little bit of what I would consider slowing momentum in the marketplace at a key level of support level that is known by the market. You see this first leg down goes from about 120, 123 and change all the way down to about 101. You're talking about a 22-point movement to the downside there. This next price movement goes from about, right there in that 114 range down to about 95. So it goes 19 points, 21, 22 points, 19 points. Third leg down looks at about the top shelf of 105 down to about 90. So about 15 points. So you go 22, you go right around what was that, 19 points, then you go about 15 points. And then the next leg down, it really kind of holds here. It really holds into that 200-day moving average. And you can really see the constructive slowing momentum in the candles over the course of the last week as well. It looks like the buyers have really identified that 200-day moving average as a real key level of support. And then when you look at that on the weekly chart, this is still that price action right before we started that entire Ukrainian-Russian war situation back in late February, early March. It's a massive buyer support zone. So it doesn't surprise me that we are seeing slowing momentum, but I do agree with Frankie, because slowing momentum is not a indication of bullish momentum. It's just an indication that the bears are slowing down. For you to see bullish momentum, you got to see a breakout. Support holding is a very important, a very important step in that equation, and that's what we're going through right now. But you work your dollar moving average bounce. I think you could be okay at that point. And so yeah, I do agree with Frankie that the support bounce is definitely interesting, and you got to see some follow through. But the writing was on the wall coming into this movement. Now we're just seeing the price action that you need to justify any type of upward movement in price.
It's setting up nice for some potential energy trades. The oil itself, the energy chart pattern, you get a little juice. I mean,
well, and can I say one last thing to it too, Chucky?
Mhm.
It's not just the price slowing momentum. Look at the amount of time it takes before the market shifts again. When you're looking at this first type of time frame, you're talking a good 2 weeks where the market was really selling down. Then you're talking a week, then you're talking 2 days, and now you hold support. The bears in the energy space are absolutely losing momentum here.
Yeah, no, I don't think there's any question about that. It's just waiting for, some nice signals. I think some energy, keep that energy watch list frosty in the coming weeks. Keep it frosty. There should be some nice bullish trades in the space.
Well, we got one energy component reporting today that is showing a little bit of upward movement. Price Schlumberger came out today. They had a pretty decent number. We'll get into that during earnings roundup. But then you get Exxon next week, and you start getting a slew of them following Exxon.
Yeah, no, it's definitely at the top of my wish list. Energy right there, along with 40% declines in Snapchat, which
I've never had interest in Snapchat, so
I know that's what I like when I was in
yeah.
Discord this morning. I was like, listen, normally a 40% decline. I just don't like Snapchat. I still think it's overvalued. It's still got like a $14 billion market cap. Yeah. So
It's all TikTok these days. It's all TikTok.
So yeah, it's still not. Maybe at $2. Maybe at $2. Give me the dollar chart, Matt, before we get into gold. A little pinch to the downside, falling 90 EMA coming into the 20. A little classic pinch descending, breaking short-term horizontal support, breaking the gap up level there on UUP. Looks like we might get a little reprieve from dollar strength. What you seeing here on the chart?
Yeah, it does look like we're getting a little reprieve from dollar strength, and that is going to be a good thing for most things in the marketplace.
Most things.
That'll be a good thing for precious metals, industrial metals. That'll be a good thing for earnings reports in the future. Be a good thing for revenue projections. That would be a good thing for guidance. The dollar, as we've talked about, puts a ceiling on certain asset classes. It puts a ceiling on certain revenues coming out of S&P 500 companies, and especially companies that deal with international, like, for example, Netflix reported earlier this week, they're very concerned about the dollar. 60% of their revenue comes from international markets. And so, yeah, if the dollar wants to give back some here, I don't think there's going to be a lot of people too concerned about that one, quite frankly.
No, it's an important chart in multi-asset classes, like you said, precious metals, crude oil itself, which can have an effect, assets in general. It'd be a nice little reprieve. Throw me over to gold real quick. Who broke the 5 EMA? We didn't have
and very quickly, you guys probably talked about the euro dollar yesterday. Did you guys talk about their
we did the dollar pinch? The mention that they raised interest rates for the first time in 11 years.
Yeah, and that's really kind of, we'll see if that continues, because again, Europe did raise more aggressive than the expectation. They came in at 0.5 versus the 0.25 expectation. They were also more hawkish on their statement regarding inflation and regarding what they're going to be doing with the interest rates in the future. think about the 14 different times we've had that conversation in the US with the US central bank being behind on inflation. Oh, no, we're going to catch up. We're going to catch up. We're going to be more aggressive in the future. And so that commentary in conjunction with the actual more aggressive central bank coming out of the ECB, that did give a little bit of reprieve for this dollar coming back down, because and that's what you wanted to see coming out of the ECB, was a more aggressive ECB. And so it doesn't surprise me that the dollar clips a little bit of support. I will remind everybody, though, that the United States Central Bank is widely expected to raise 0.75% next week, which will make that carry situation even worse after the 0.5% interest rate adjustment from yesterday out of the ECB.
Yeah, I know. I mean, it's a reprieve, right? I mean, I think we choose our word very carefully.
Short term.
Reprieve.
Short term.
You come down, you do any of the pullback situations over the next couple of weeks, where you come down, trade sideways, upper lift, then probably a bullish trade. And as Frank mentioned, you can get some pretty cheap bull call spreads on UUP if you get that set up.
Yeah.
You can get some pretty cheap UUP. But give me gold real quick. It was nice to see gold. Basically break the short-term momentum, because this was one of my big worries, is that we saw copper below the hard 14, those two moving averages for like my whole lifetime, what it felt like over the last month plus. I was worried that gold would get in that situation and algos just pound it back. Coming down to this like little support level, breaking the short-term momentum, could lead to some stability. Anything to add there on gold?
It could lead to some stability, and it's about time gold starts punching back up a little bit, reclaiming that 9 EMA on the ECB announcement from a day and a half ago. It'll be interesting, Chucky, but you got to work out some momentum scenarios here, and the momentum scenarios I'm talking about are actually the bearish ones from a trending perspective, not just the past 2 days. You got to work through reversal analysis here, and I feel like I've talked a lot about reversal analysis in the last 3-6 months. So it's fresh on everybody's minds what we need to see. Why do we like crude oil at the 200-day moving average right now? And why are we looking at a potential breakout? Well, it's because we've had, consecutive legs down with slowing momentum. We're now having a double bottom support bounce. Why do you like some of the ARC things over the last month and a half? Because you had a double bottom, you had an increase in support level. We know the art of the reversal, slowing momentum, double bottom, double top, breaking of resistance, and then this snap back bullish retracement. We're not there yet in any remote capacity. Are we there yet? We got a road to walk here before gold starts looking a little bit on the bull side. And again, to me, the number one chart you got to be looking at is that euro dollar, and then obviously the index UUP.
Yeah, I know. Indeed. Frank, Bitcoin doing its thing here. A little pinch developing on the daily chart. Still got overhead levels, but the depth of the sell-off, some of those longer-term moving averages, got a pinch.
Yeah, I mean, if you're interested from a buying perspective, this is kind of what you want, right? You want to live above the 9, below the 50, let that compress a little bit, get that break to the upside, and maybe have a little bit momentum. It's a good first step, right? You haven't won the pinch yet. You very well may lose the pinch, and it might go the other way. But I do think if you are interested from a buying point of view, I think that's kind of how you wanted this to develop. If you haven't already got into it already, I'm assuming you are looking for that next setup. And for me, at least from a buying perspective, the next actionable setup would be the 950 pinch. It still hasn't broke it. You got to break it, right? And I'm not all that interested, to be quite honest with you, in Bitcoin. But technically, a pinch is a pinch, right? I'll always call it what it is, regardless of what I want to do.
Mm-hmm. Yeah, Matt, we had Elon sell all of his Bitcoin. We had.
I didn't catch that.
Tesla sold 75% of their Bitcoin holdings.
Oh.
Yeah. And
alternatively, they kept 25%. Mark, come on.
Yeah,
glass half full, buddy.
There, buddy.
Well, and I joked yesterday in the halftime report, Matt, that Tesla is very good at accounting, because that produced a free cash flow positive. Even though they took a loss, the selling of it created an accounting thing where, even though operationally they were not free cash flow positive.
All right. Elon calls the CFO and says, "How much Bitcoin?" Like my mom does. How many of my Bitcoins do I need to sell to cover that free cash flow rate?
Yeah, I mean,
75% of the
apparently
Bitcoin holdings.
75% was the
Done.
number.
Sell it.
And then in a day where, listen, I look around the underbelly world, Shopify, GameStop, Lucid. I mean, the whole underbelly world is selling off like there's no tomorrow. And Bitcoin's like,
Yeah.
Little
taking a
doji
couple
fest.
punches here the last couple
Yeah.
of days.
Yeah.
Well, and it has. I mean, a little doji fest the last 3 days. You got a spinner, you got a morning star, and you got a doji. All of those are doji class type candles, and you're doing it right in front of. You're basically hugging the 5 and the 9 on the upside, and obviously the 50s capping it out as resistance on the top side. I'm kind of with Frank here. I know it's outperforming a little bit, and I know it's looking pretty decent. And quite frankly, Frankie, I would label this the best technical setup Bitcoin has had since the failed breakout of the 200-day moving average.
Yeah.
Right here, I would say that it's a pretty decent little high base coming in, consolidation pattern after a double bottom, slight double top, good breakout with volume.
Yep.
You got a little bit of a defensive consolidation here. It does look healthy. And, honestly, I don't think there was a trade within this. I do think there's a trade if you break the 50 and you can start running that into that lower level of support over here, somewhere in that 28 to 29 range. You could certainly see Bitcoin punching if it does reclaim. I would have to put that at 25,000. I mean, the 50 period moving average is right there at 24,300. 25 is right above that. You do got a pocket there. You do got a little bit of a window there. When you're looking at this on a weekly chart, you also got back into that 9 EMA pocket. It's kind of hard to see, but you're right there. The close where the closing price is would officially close above that 9 EMA. And that close above that 9 EMA would be a weekly close above the 9 EMA for the first time since right there. When you broke back up above that, then had a couple weeks of, good price movement before you did have that failed breakout. And so Bitcoin, it is looking a little bit, better right now than it has in quite some time. I'm still with Frankie though. There's a lot of reversal analysis out there. And there's a lot of, quite frankly, stocks that, I know Bitcoin looks good here, but there's a lot of stocks that look better, quite frankly.
I would agree with that take. There's things that are in that similar pattern.
Yeah, it's not an anti-Bitcoin take. It's just that there's a lot of other things that are reversing right now.
Yeah. You got choices, right? Choices is always a good thing.
Yeah.
I just want time to pass so I can hodl. I just want to hodl. Well, listen, earnings season is going to give a lot of information.
Hold on. I need to go on the hodl comment for a second. Hold on. I'm not letting this one get past. Your naked puts at $10 on Bitto is not hodl. No.
Dude, it's all a matter of perspective.
You got 30% ranges on the downside. It's like, yeah, I'm diamond hands. No.
Listen, no. I am my own version of diamond hands. Listen,
you got a $10 naked put. Hodl.
I support the GameStop crew. I just don't get involved unless I've had 14 straight down days and I can sell a naked put at a 0.15 delta.
All I'm saying is this, Chucky. All I'm saying is this: when you've sold a put option, and we'll just say the put option is on the weekly chart here. We'll go the weekly here. We'll say you sold the, let me go out a little bit more here. And you sold that $10 put option. You had 7 days to go. And Mark's like, hodl. That is a 2 delta contract, which is a 98% probability.
Hodl unless I need the margin.
Actually, I think I like Mark's version of hodl now better.
It allows me to be bored to death with the market as I wait for themes and opportunities to pop up.
Bitcoin again, Bitto starting to show much like the underlying, a little bit of a double bottom, a little bit of double top, got the 50 tight. Keep an eye on it.
And those opportunities that will come up in the coming weeks and months. Earnings season is going to play a big role. Who is doing well, who is not. what does the market love, what doesn't do it, and we're going to transfer into stock talk now. Listen, I just got to stop before you get in. GameStop split today. Did you see that?
Yeah, GameStop given the split.
Old GameStop split. And then immediately is like,
like, wait, we got to make GameStop great again? Not today.
But just thought that was worth noting. What you got? We got busy earnings lineup.
We
again,
do.
like we are going to have every day for weeks. Where do you want to start?
We do have a busy week. We already talked a little bit about Snapchat and their sell down. Twitter also had a little bit of earnings report here today. They came in at a negative 37 cents. The expectation was negative 6. Revenue did come in at 1.2 versus 1.3, forming a high base with a little bit of a resistance breakout. And Frankie, I have zero interest. How about you?
Yes. I have no interest in Twitter at all.
At all.
I can't even remember the last time I did, but it was a long time ago. Yuck.
I wonder what's going to happen with that court case coming out of
It's an interesting story to follow.
Very lucky that they have that court case unsettled. Very lucky.
But no, I have less than zero interest to quite frankly, for quite a while. But Twitter did have report earnings here today. I want to start in the energy space, though. I want to talk a little bit about Schlumberger, SLB, if you will. Schlumberger, SLB, a little bit of gap up, but not carrying through. Obviously, market profit taking Friday here is going to have an impact on a little bit of this selling behavior after the cash open. But Schlumberger comes out with a pretty decent earnings report, and Baker Hughes, Mark, came out with not a very decent earnings report last week. Schlumberger comes out with a really good one. And, I remember talking to you about Baker Hughes because I was a little bit concerned about Baker Hughes. And you're like, Matt, don't worry too much about old Baker Hughes. They do a lot of machinery, not necessarily just drill, baby, drill, or the refinery type scenarios. Well, Schlumberger comes out and they just say, you know what, we're gonna kick off this with a hat trick. And Schlumberger definitely did that. They came in at 50 cents versus the 40-cent expectation. Revenue came in hot at 6.8 billion versus the 6 billion expectation. That resulted in a 20% revenue increase year over year. But what they also did was increase revenue guidance as well. And so they didn't increase EPS guidance, but they did increase revenue guidance. And I am seeing a little bit of that across the board, increasing revenue guidance, maintenance mode on EPS guidance, a little bit of inflationary impact there. But a hat trick coming out of Schlumberger. What's your technical read here, Frankie?
That's messy, right?
It is.
That is a really, really messy chart. In a chart like that becomes a sell naked puts chart, sell bull puts chart. Not necessarily today, where you are really more banking on the stability versus the upward mobility, because there's just a million things, right? It's been a long time since I've enjoyed trading SLB, and they're within this bigger range. That's a tough. There are going to be some windows, but they're going to be pretty tight, I would suspect. I don't think there's anything to see here from a directional point of view, at least just yet.
Yeah, that's me too. I mean, you got a foundation here at 30. You really do. And again, Frankie, what's 30? 30 is the new 20, right?
It is the new 20.
It is the new 20. And so you got the 200 weekly there. You got the wick from 2 weeks ago. You got a lot of old data between 30 and 31 as well. And so, selling a naked put for cash flow purposes under 30, selling a bull put spread underneath 30, that makes a lot of sense to me. Betting on that stabilization and that foundation of support. But that is choppy behavior on the daily chart. And I'm right there with you, especially with the wick of today. Just a little bit of rejection as it got close to that 200-day moving average. So I certainly agree with you. But a hat trick coming out of Schlumberger and really good numbers coming out of Schlumberger. You know what didn't have very good numbers was Verizon. Verizon didn't have very good numbers at all. In fact, Verizon said, you know what? We're not going to beat. We're not even going to come close to a hat trick. We're going to miss on EPS. We're going to come in line on revenue, and then we're going to lower guidance. And whenever you see a gap down and sell down on any financial instrument right now, it's typically guidance based. The raw numbers are not having as big of an impact right now. Everything, and I said this coming into earnings season, It's all about guidance, guidance, guidance. And we've seen that play out in the first 2 weeks of earnings season. Guidance playing here as well on Verizon as they come in at 131 versus the expectation of 134, revenue at 33.8. That was the expectation. And then they did lower guidance as well. The lowering of guidance, again, you're in the stock, they lower guidance. It is a little bit of lookout below. And this is clipping a lot of support
Well,
here,
give me the
Frankie.
monthly chart,
Yeah.
man. Great grandmama. You know,
it's
great grandmama sits back and doesn't, she's lived a good life and she doesn't get a lot of action. Coming down to great grandmama, the 200 monthly moving average for the first time. That's a moving average pocket on the monthly chart that filled.
Yeah.
And on Verizon.
On Verizon.
On Verizon. So it's one of those situations where a little bit of lookout below, you do have a pretty good support level around 42.5, 42. And so keep an eye on that. But Frankie, Verizon's not a great shorting stock either.
Yeah.
And so it's more of one of those cash flow dividend firework type stocks where you can't even get a great covered call on it, but the covered call combined with the dividend, you can certainly make it work. But this is just a look at this is stay away from me. What about you?
Yeah,
guys?
this is just let this drop. Hey, drop. I'll play Mark in this one. Drop, break that support, drop, do your thing, and then get to those lower prices because it is a good dividend payer, and you can still sell the covered calls. You don't get the premium, but like I said, between the two, you can do pretty good. But I'm going to be Mark on this. I'm going to be greedy. You just break that support and drop, and let's talk like 6 months from now.
Yeah, I'm there too.
This is a check-in every other weekend to see what the chart looks like.
Every other weekend on Verizon. I think that's too aggressive.
Yeah. So it's going to be a minute. It's going to be a minute.
That's where I see it as well. Let's talk a little bit about American Express, as a lot in the financial space, XLF, if you will. I don't want to say they're done. We still got some regional banks and we still got some other financials, but a lot in the financial space has come and gone. American Express comes in, they say, okay, we're gonna really good on EPS and revenue, and they did do really good on EPS and revenue. EPS came in 257 revenue. The expectation was 237, so a good beat on EPS. Revenue came in at 13.4 versus the 12.4 expectation. Their guidance report was mixed, though, and that's why you're seeing a little bit of the gap up, sell down behavior. They lowered EPS guidance while they increased revenue guidance. And again, I'm seeing this a little bit over the last 2 weeks. Not something I want to say concrete yet, but it is something I've been picking up on in a lot of these earnings reports. Is they will basically do something that American Express did. They'll raise the revenue guidance expecting to make more money, but they also expect to have a higher cost. And so because of that expectation of the higher cost, that EPS is coming down. It's just something you don't see a lot. And that's why I think it's a lot of the inflationary pressures here. But again, a little bit of mixed report coming out of the guidance with the lowering of the EPS guidance, an increase of the net revenue guidance. Makes some sense to me overall. I do think you're taking the earnings report out of American Express net as a positive. Those beats on EPS and revenue numbers were really good. And if you split the mid there on their lowering of the EPS and increasing of the revenue, guidance was mixed. And so makes some sense to gap up, makes some sense to take a little profit and see this work into a little bit more constructive technical situation. For me right now, a little bit of a stay away till we see this worked out.
Yeah, I mean, I'd like to see how it develops as it pulls back into that 150 range, that 50-day moving average, that rising 9 it'll be catching up. Depending on what it looks like in there could be interesting. But
I agree.
That's a few days away at the least, right? And that's assuming it looks interesting at all.
Yeah, well, and the thing about it is, I mean, if you do give you a 2-3 day pullback, let that 9 EMA come in, you could see a pretty decent little pullback here. Any inside candle, I think you need to see development, regardless of the situation. I do think you need to see a little development out of American Express. Healthcare plan, HCA, Frankie, you like talking your healthcare plans out there. HCA doing pretty decent here today. They don't provide guidance. A little bit of a gap up on their raw numbers, 421 on EPS. The expectation was 367. So a real good beat on EPS coming out of HCA Healthcare. Revenue did come in line slightly above 14.8 billion versus the 14.7. So HCA doesn't provide guidance, but raw numbers pretty good, passable grade coming out of HCA. What's your read, Frank?
Yeah, I mean, it's in the middle. I like it. Boy, these guys can get crazy on earnings lately, especially. I mean, you've seen some huge gaps as of late on these guys. That's an awful tough candle to try to build a trade off of. But would be even more interested in a quality, developing pullback on HCA than AXP.
Me too.
Personally,
Me too. Because the strength in the gap up created a little bit more momentum.
And so it's still probably over a week away. I mean, realistically, I can't see a scenario where I would be comfortable next week.
Can I say the scenario? There's two scenarios where I think make a lot of sense here on HCA. One, you got a little bit of a semi gap pullback into that 50 where the 90 EMA comes in and converges to create a support level somewhere around the 190 level. The other one is just a high base here. Stay above 200, which is an old support pivot. You stay above 200 to give that high base fill. But either one of them, you're talking a week out, I think.
Yeah, I think you got some time. That's a tough location with a tough candle. Just means it needs a little time to develop. But yeah, I am interested. These guys bounced off the 200 weekly. Of course, that earnings helped, right? But they were dancing on it the last couple of weeks. So this could present some trading opportunities going into the quarter. Just going to have to wait for that to kind of get started.
Love it there, Frankie. And then the last,
and this is the thing, man. We commented on this yesterday, is that this is one thing you did not see very much of in the first two quarters. It's a change of characteristic in this market where you have these type of gap ups, where you have these type of strong moves up. I mean, we saw it in Nucor yesterday. We're seeing it in HCA today. I mean, the first two quarters were, hey, maybe you go up or maybe you go down 27%. Right? That seemed to be the mentality. It's a changing characteristic, and it makes covered call decisions. Because the first two quarters was very easy for me. It was like smash a covered call because you had no worry about a stock running. That's not the case anymore. That's not the case anymore, is it?
I agree with that observation, Mark. The first two earnings season were, man, if your stock played defense, you were happy.
It was a win.
You were happy. You called it a day, and you're like, let me go to the next day. That's fine. Because your worry was that 27% gap down, and we did, and that really started with Netflix's first report this year. And that just put that concern and that fear to a certain extent in a lot of market participants' heads coming into earnings is, are we going to get Netflix? Are we going to get Snapchat for the 14th time? Right? You had a lot of that concern, but you're not seeing that across the board this time. You're seeing more punching up and versus punching down. The defensive nature, you just haven't seen a lot. You see more HCAs and American Expresses versus Verizons, right? And quite frankly, that kind of feels normal. Yeah. Like that's what it kind of feels like it's a normal market condition. And I know that's weird to say coming on the backs of the volatility we've been dealing with for the first 6 months of the year, but so far the back half of the year hasn't been nearly as it hasn't been nearly as similar to the first 6 months of the year.
Yeah, no, changing characteristic. Make note for your own covered call decisions on your long-term investments and earnings. Can't quite just smash the cash flow button.
No, and Cleveland Cliffs here showed a little bit of a selling behavior on their earnings numbers and they came in at 131 versus 134 expectation. Revenue did top the expectation at 6.3 versus 6.1. Cleveland Cliffs doesn't provide earnings, but with the miss on EPS, a little bit of a downward movement in price here. Nothing too concerning, Frankie. What's your read as we try to test that 20 period moving average?
Yeah, I'd like to see that hold. I think it's an awful tough buy, but I would be interested in development on this thing if it can. We've got that support zone. You kind of got the early steps, right? Lots and lots of work to do. I still think you need a little bit more before you start going cash flow on this personally. I would at least. But yeah, I think it still belongs on a list. Again, it's just so hard with that candle in particular, right? It had
Yeah.
2 or 3 barred real mellow style into that 9. Might have felt a little bit different, but with it being, heavy hitting, now you got a confirmation hypothetically on Monday at the earliest. Now you have no risk to reward. You're going to have to deal with the overhead. So it becomes very difficult to trade this
Yeah.
on this test. But I think it's an important test.
Well, and it's not just Cleveland Cliffs on their test of 17 and a half. And I do agree with you. It is an important test. You got a couple front runners that are going through some important tests as well. Nucor's front running what Cleveland Cliffs is doing, and they broke back up above all your moving averages, which means you got a foundation. You got a foundation of support to build the case off of. Still Dynamics, STLD here. They had a pretty decent earnings season, and you're talking about some consolidation and a hypothetical break above the 50-period moving average. And then when you're looking at, Cleveland Cliffs, just a little bit of a relative underperformer here. And so it's just a matter of, which one do you, in this reversal analysis, which one do you really kind of want to gravitate to? And I think if I had to pick, I'd probably pick Still Dynamics or maybe even Nucor with them being all, above every moving average on any retracement here. Breakout, we might have a different scenario with a breakout in a week from now. But any retracement, I think you got to be looking at the other two first.
I would agree with that.
Yeah. All right, Chucky.
That's interested though when a pattern develops on one of my favorite stocks with the P ratio, forward P ratio of like 3.
Oh yeah, I think Cliff is definitely somebody that you're watch listing, right?
Well,
they're so financially healthy in their stock buyback program, and
all 3 of those companies are really good cover call companies too.
Mm-hmm.
Yeah, so just give me some pattern, give me some stability, or whatever it may be. But all of that. Is that for it for Stock Talk today,
That
man?
is it for stocks in the news here.
You didn't
today.
even go over Snapchat.
I did. I talked about it for about 3 seconds in the market sky.
You did bring it in the open, and that was all that you could ask for.
I listen. I think CNBC talked about it enough.
Oh, fair enough. Well, listen, the end of Friday, every Friday, after we get done with Stock Talk means one of our more popular segments, which Matt has several times said is his favorite segment.
I don't have favorites. This isn't true.
This is his favorite child, is Frank's Charts, where Frank and Matt, two just absolute technicians, believers in technical analysis with combined, I think I can say 30 plus years now experience.
Oh man, Frankie, we're old.
Yeah,
old.
I think that's officially accurate now. Bring 3 stocks each, or 3 ETFs, or whatever it may be. Sometimes they're bulls, sometimes they're bears, and they just talk about charts and what they're seeing. We call that segment Frank's Charts, and I'm going to fade off into the background and enjoy it with the rest of the crew.
All right,
Frankie,
appreciate that, Mark.
I think we're doing 2 stocks today, right?
Listen, I got a couple bonus ones.
You throw your bonus. I got 2.
This, I brought it up earlier, and I complain about it mostly jokingly, but this is the tough stretch as a directional trader, right? You've got so many ahead of you, so many earnings behind you that you just are kind of in that.
Well, and honestly,
that spot,
Frank,
right?
Honestly, that's kind of what happened to me today. I haven't had a chance to do all of my scanning today because I had way too many earnings reports to kind of go through.
Yeah.
And that's just indicative of what we're dealing with as traders right now. There is a tremendous amount of earnings reports. And when you're talking about the next 2 weeks is the biggest 2 weeks of
a lot of those
season.
are the trading stocks, right?
And
a lot of the software,
brand names,
oil, and brand names,
a lot of tech, and a little bit. Maybe you're seeing a little bit of relative underperformance in the ARC and the aggressive growth because they're the ones coming up in earnings season, and there's been a little bit of run up there, so some profit taking there right now happening as well. I got a bull and I got a bear for you today, Frankie.
All right, where you want to start? You want to start with your bull? You want to start with your bear?
I'm going to go bear then bull.
Okay, going bear first. All right, I like it.
I'm going to go bear then bull.
All right, what you got?
For my bear this week, I do got Petco here, Frankie.
All right.
And a little bit of that scaled in approach. Okay, that scale in approach. If you're looking for some bearish delta, it's not as easy to find bearish delta today as it has been in the last 6 months. Again, that changing characteristic. By the way, that's a positive thing for the bulls.
Sure.
But in terms of if you are looking for bearish delta, there's going to be a few stocks to be had here. And again, a lot of those, some stocks have earnings, but Petco here, we don't report until the 18th of August. We got plenty of time for any short-term trade in between here. And what I like about this one, Frank, is you got a little bit of a conservative entry to a scaled in approach with if we ever do get the breakdown. First and foremost, I do like the constructive nature of what this would be labeled as a bearish retracement, bear flag-based pattern, where you set a lower level of support versus the previous one, a little bit of a snapback retracement that really struggled against any of your moving averages. When you're looking at Old Wolf here, you're seeing downward movement in price. Market starts to find support here. Market starts to pound up. Market starts to break everything. Well, Petco here was underperforming all of that going into that type of price movement this week. And so that carry through that the market had this week simply just brought Petco back up into that 9 EMA. And then over the last 4 trading sessions, you have not been able to maintain any bid above that 9 EMA, looking for some downward movements in price. And what I like about the scaled in approach here, Frankie, is you're looking at this level right here at about 1440. Right there at about 1440, you see that level, you get an order in underneath 1440, it starts to open up from an intraday perspective a little bit down, all the way down into that 1380 zone. And then when you're looking at 1380, that's kind of right where that double 1370, call it 1370, Frankie. Let's take into account that wick over there.
Okay.
And so you got that wick at 1370.
All-time low, by the way. All-time
low wick at 1371. And then you got the low of this candle right there at 1374. And so it's almost like the market knows that is a algorithm wick support bounce right here on their earnings. And so you got that all-time low scenario here right there at 1370. I like a scaled in approach under 1440, add to a position underneath 1370, work into a position into that breakdown. I like that as my bear pick of the week.
Yeah.
Here in the halftime report. Might have a different one for rapid fire after I get through a little bit more of my scanning. Now, from a stop loss perspective, again, anytime you're looking at a stop loss placement, a lot of times you want to come in and see where the selling behavior begins. And Frankie, it kind of just stands out here at 15.
Yeah.
Right there at 15. You get that wick
top there.
Little top over here, double top, stop loss slightly above 15. And then when you're looking at targeting here, Frankie, got something caught in my throat here. But when you're looking at targeting, it's a little bit tough. And the reason it's a little bit tough, well, Wolf's never been here, bro.
Yeah.
So
it's a good thing. It's a good tough, scenarios. Right?
Yeah, it's definitely a good tough. No doubt about that. It doesn't have anything underneath 1370. And again, we're coming through a little bit of a consolidation pattern as well. But if I want to look at a target, because I do think $10 might be a little too aggressive on the target here. We are talking about a $14 stock here. And so when you're looking at a potential target, I'm going to have to use some potential average yield analysis, Frankie. 17 to 1450, about 250, about 260 there, 16 down to about 1370. And so you go about $2.50 on average in these types of price movements. You got that resistance at 15. You move 2.5. I think you got to be targeting right here in the 12.5 range. Secondary target, you're never going to get that in front of their earnings report. Let's look at seeing what we can get underneath 1370, but I think 1250 does make some sense here. I'm going to target 1250. We'll see if we can get there in between now and the earnings. But for right now, looking at a 1250 target, stop above 15, scaled in approach on the entry. What do you say?
Yeah, I like it. I really like it. I like that retracement. I like that we're dealing with those all-time lows. And I think because we are, it makes sense to take that scale in approach. I always think it makes sense to take a scale in approach. You know me, Maddie. I like it. I think the analysis is spot on and certainly a good, clean, bearish retracement. Got a nice little entry, nice little place for a stop loss, as you pointed out on the intraday. So yeah, you got me on that one.
Awesome. All
right. So you're gonna
go with?
So you went bear. I'm gonna go bear. I got two choices.
Let's give it to him. Give
All
me
right,
both.
so okay, I got three. One can't go. Let me start with one that can't go on the reports from a rules perspective, and that's ACAD. These guys
A
rolling
little too tight
over,
against earnings.
breaking a little too tight against earnings, but you still do. They're right there on the fence, right? I think they're
Yeah.
like 12 days away, so they won't be able to make the cut. But you are rolling over, breaking through that support level, broke through the trend line already. So certainly something worth keeping an eye on. But my two I was thinking about was Lockheed Martin
LMT.
had that snapback post earnings, right?
Mm-hmm.
Did not have a stellar earnings report at the very least. Rallied back into that 9 into that 200. This is going to present a really good opportunity from a risk to reward perspective. Very similar is Fast. Still watching these guys. They had that gap down last week, have rallied back up and kind of stalled out here. Which do you prefer
I
of
like
these
them
two at first
both.
glance?
They're fairly similar.
They're
I do
close.
like them both. Lockheed, little bit of an oversold bounce here on Fastenal, a little bit of an oversold bounce. Both coming into some pretty decent resistance zones, both pretty decent entries and stop loss placement. If I had to say, I personally would put Fast.
I
And
would
again,
too.
splitting hairs a little bit there. But I think the combined nature of the trend proceeding, the momentum, the consistency on the downside, cheaper stock. I think Fast
Yeah,
makes
and where they
just
are,
slightly,
right? They're
yeah.
at that old support level, so they had that breakdown. So both I think
Mm-hmm.
worth keeping an eye. Post earnings on both sides. Talking about Fast here a little bit. You just kind of
Yeah.
kept punching up all week long, just barely finding a way to make a higher
Just
low, right?
fade, fade, fade.
All
Mm-hmm.
week long. That oh, okay, tomorrow it's breaking that previous day's low. Nope, I'm getting close, but I ain't gonna do it. And so that's okay, right? With that's
Yeah.
perfectly fine. We didn't get any entries, and I think when we're thinking about it from an entry point of view, you're kind of going to be going into that intraday, and you're kind of looking at that zone right around $48, right
Mm-hmm.
around that below
In
48
terms of entry,
as far as entry goes.
yeah, I
You
think it stands out.
I think so. I mean, you could aggressively, if someone said, "Hey, I'm going in," assuming this was a closing handle, if someone
Like
said, "I'm going in below
48.20.
today's low on Monday," I would feel okay about that. But I feel like you're going to get a little better confirmation if we follow through and get a lower high, lower low Monday. Then below that low, wherever that might be, if that's north of that 48 zone, I think
based
would
on
be
what
okay
we
too.
know, based on what we know today, I think 48 makes
I
sense on
think
the
so too.
downside.
I
Yeah.
think, and I was looking. I talked about these guys in Trade Masters on Wednesday. I think you caught it. The puts are pretty cheap on
Mhm.
it, so can definitely play it as a directional play if we want to do so. And that's a huge. I mean, there's just nothing there. That's a huge break, right? That break of that support level. There is no support that's built as we get to that recent low. Just south of $46 gives us a really good window to work with. Going to have some old support going back into that 43.50 to 44 range if we can take out that support level. So I like this one because it makes sense to me. The location makes sense. Never, at least in my personal opinion, never triggered this week, so didn't do any trickery or anything along those lines. Really big window to work with. Options are fairly cheap right now, so I think this really makes sense from a bearish perspective. I like it directionally. Just need to see that downward movement. As of right now, I agree with you. Below 48 is kind of where my head goes.
Well, and that just gives you the ability to break through the last 4 days of consolidation, especially
Exactly. And it
especially with
doesn't
that.
cost much, right?
No, it does. And we're
It'd be
talking
different if we
pennies
were
against
50 and we were
dollars.
waiting that long. Okay, but we're not, right? That's
No,
50 cents.
we're just waiting 50 cents for additional probability. That's it. That's it. I like the trade there, Frankie. I like Lockheed too, right? Lockheed. I mean, when you're looking at Lockheed Martin here, nice little 3-4 day bullish, bearish retracement, bear flag coming into the combo 9, combo 200-day moving average. I would have liked it a heck of a lot better if it would have stayed underneath that
Yeah.
200, honestly. And so I just felt like Fast was maybe just slightly more clean on some of those entries and stop loss, but pretty good pick on both of those, Frankie. I'm gonna go with my bull And my bull is more of a position type analysis, not necessarily a
Okay.
swing trade. A little bit of a deep retracement for that. But what I like about General Mills is for people that are looking to pick up more of a consumer staple type product in this environment. General Mills looks pretty good here. For people that are looking to pick up something defensive, General Mills looks pretty good here. Food, General Mills looks pretty good here, and it looks pretty good here because technically, when you're looking at it on the weekly chart here, Frankie, you got this as a little bit of a snapback pullback coming into a rising 9, which coincides with the old resistance pivot right there
Yep.
at about 73.5 by 72. And so you got a little bit of a historical support resistance zone that certainly could act as a support zone. Now, it wouldn't surprise me, Frankie, to see some more fading action here. And so as it comes down into that 200-day, and I like three bar pullbacks more than 2 bar pullbacks. And so I'm willing to give it a few days to kind of see this work itself out underneath the 74 handle. And I think that's important here, Frankie, because it certainly could come down into 72 and consolidate around 72. And the reason I say 74 is if it gets back up above 74, it's go time. Let it do whatever it wants to do underneath 74. You see the old double wick top over here, 74, 74, 74, 74, 74, 90 MA, 74. And so I think you're looking at that 74 handle saying, you know what, I like the pullback on the weekly chart. It can certainly pull back another bar into that 3 bar pullback versus the 2-1. And typically 3 bars is more of a bullish retracement versus 2 bars being a little bit more of a bullish flag. But I do like it because you can just say, let it consolidate, come test 72, do a dance between 72 and 74, take 3 days, take 4 days, take 2 days, 1 days. It doesn't matter. We're looking above 74 for confirmation here. And so if we do get it above 74 and probably also that 20 period moving average as well, you're looking at that 74 handle as entry. Stop loss, I do think you're looking at 72. And this to me is not a swing trade. I think there's better swing trades out there. This is more of like a pick up position trade to take advantage of some of the themes we've been seeing in the food areas of the market.
Right.
And I like the pounding here on their earnings. I like the pullback here. And so let it do a dance between 72 and 74. Stop loss placement for me would have to be underneath 72. And when you're going into any type of position trade, to me, it's not necessarily about where's that stop loss going to be. I do believe that stop loss has to be started underneath 72, maybe. But in terms of the target, I don't really have a target here. Kind of what I feel the plan could be kind of working into is more of just as long as the trend stays consistent, we stay consistent. And so something along the lines of this is what we're kind of looking at here. You break back up, you come form a new support level that confirms. You initiate that stop loss underneath all that dance between 72 and 74. If it ever comes underneath 72, who cares? Who cares? That's the cost of being a trader and an investor and taking advantage. But wherever that next support level is, and again, I'm talking target management here, but I'm doing target management through stop loss management. And so as you set up that next support level, you just trail that stop loss underneath the pivot point. You let it work itself out, where the next, you just trail it back up again. And so you just basically manage the target or the profit taking through stop loss management underneath underneath these support pivots. But I'm looking at General Mills from a little bit of a mid-tier position swing trade. Definitely not a swing trade here, though. Don't care if it dances between 72, 74, breakout at 74 with stop under 72. Stop loss management is from a pivot support perspective.
I like it. Yeah, almost a Cody special-esque vibe on that weekly chart, right? I love that zone that it's kind of pulled into, and like I said, it still has to show a little movement to get some confirmation, but that's a good zone, at least to me. I like that one, and I do think it is more into that late swing into position, not a 3-day trade, right?
No,
So,
it's
I mean, hey, hopefully it is,
it's
right? That'd be
General
great.
Mills here.
If it wants to have a
Yeah.
great 3 days, that's okay too, right? But
Hey, if you pumpers want to pump it from 74 to 80 in a couple of days, I don't think anybody's going to be
I will
like,
never
no.
complain about that. Never, 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 never. You know, I was thinking as I was looking at the guy I'm going to look at here, OLO, Maddie. It's daily kind of has a similar vibe to the weekly that you were looking at,
That little
uh,
inside snapback.
where you
Yeah.
had that breakout. You're now pulling back. You're working into the 9 on the daily, in this case, into that old resistance level. See if that wants to hold up as support. This is definitely going to be one of those Nita dojis, right? Flag into that 9 EMA type of pattern. So probably the pullback, I would personally say, is not actionable just yet. If it just were to take off on Monday morning, I would say the breakout is. If you take out those highs from Wednesday and Thursday, I think you could put it into the breakout camp, and that might be the way it goes, right? Might not pull back any deeper. I think ideally you pull back just a little bit more, maybe get a doji on Monday into that rising 9, into that old resistance, and play the flag, or at least from a scale in perspective, play the flag there. What I love about these guys, Maddie, is they, barring something weird end of day selling, they're going to close above the 20 weekly today, which will be the first time, like maybe ever, but certainly in a very, 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 very long time. They don't have a super long history. So that's going to be some positive development. They've got a nice window into that 14 range, which is, you know, at a $12 stock. That's pretty good,
That's a pocket.
pretty good window, right? So
That's a pocket.
got a really nice window to work with. So this one, it can be a breakout, right? And I think that's always fair, right? If we take out those highs, getting in using breakout mechanics, trying to work into that $14, fill up that window. I think ideally we're saying, hey, let's get a little bit more selling. Let's keep it simple. Let's keep it light. Let's not get crazy. Let's not see a giant red bar, right? Let's just see a little more selling into that 9. And at least from a, you know,
So you want to flag this.
I
You
would
want
like the
to kiss
flag,
it off
yes.
to 9, confirm at above 12.5.
Yes,
Yeah,
that's
I like
exactly
that.
so. I
I
think
like
you
that.
can play the retracement if the
You can't,
retracement
if you
lines
don't
up.
get that, you can just
And
play
you can
the
just play,
breakout here.
and I love charts
Yeah.
like this because it
Yeah.
makes it easy, right? And so I know I can play the breakout because I've really identified the
If
window
you
that I'm
don't get
trying to
A,
work with.
you got B here.
Yeah. So hopefully we get, you know, a little bit of a flag, you know,
Yeah, I
into
like the
very
pocket
early
here.
next week. And hey, if it just wants to break, that's all right as well. Low price stock,
Well,
holding
talk
up.
about a terrible time to IPO last year,
It
Olo.
picked a bad time to stop
Oh
drinking, right?
man, but yes, it did. Yes, it did. Good consolidation here. You know, we talk about IPOs as a stay away. You want to see the market tell you when to pick it up, and the market's kind of telling you they're picking it up.
It's starting to show some signs of life, which is nice to see. And you're
Yeah,
seeing this in a lot of the software companies, right? Which
you are.
of these guys are. But I like relatively they've been mellow today versus most of the selling that you are seeing. You're seeing a lot bigger percentage down
Yeah.
moves in a lot of these software type companies too today. I like the zone.
Well,
I like the
and
reversal
again,
characteristics.
this stock's up 20% in the week,
Yeah,
right? It's a little bit of a selling behavior. Shouldn't surprise
not at
anybody
all.
with the market again approaching a Friday for the first time with some profit, right? It doesn't surprise me. So a little profit taking here today.
Yeah. Don't mind it at all. I mean, I was
Uh,
hoping to get that
that
flag
little
to
bit of
develop.
profit taking is turning into a little bit of a more profit taking S&P.
Yeah,
I'm 51, but again, haven't broken anything yet. Just getting back yesterday's price movement.
Yeah, exactly, which is fine, and good for me in the case because I don't have any Olo here, so I don't
Nope.
mind it coming down a little bit
Nope.
as long as it does it in a constructive manner. Right, so
Well,
that's my official bull.
let me ask you a question though, Frankie. If we
All
were
right.
approaching next week in the market breaking out yet again, I mean, you're overextended going into a litany of very important earnings reports and a central bank announcement. And I think that's a tough ask to see the market continue through that
Yeah.
without any pullback, without
Yeah, I
any
would agree.
but without any flag, without any profit taking. That's a big ask of the marketplace to go from 3,700, break every moving average, break 4,000, break 4,100, which is a massive, massive resistance test on those weekly moving averages. And I mean, it's not a bad thing to consolidate in high bases, guys.
No,
It's not a
no,
bad thing to
it's normal,
flag
right?
and to, build support levels. Those are very constructive for the market. So that's all I'm taking today as so far. I mean, obviously we'll see what happens through the weekend, but I do like your little trade there, Frankie. I like that pick, especially coming into those longer term pockets there. Looks pretty good there. The last thing I'll talk about here today, and I want to bring Coach Mark in here as well. Mark, come on in here if you don't mind.
Okay. I'm just happy Frank gave me another underbelly stock.
Yeah, he did.
Yeah.
Yeah, he did.
Yeah.
So I wanted to end on a question. My mother, Mark's mother, Frank, your stepmother. You were adopted 20 years ago.
Yeah.
Okay. So it's not stepmother.
It's adopted mother.
Yeah, adopted mother. But okay, so in terms of our mother is visiting today, and her first question to me yesterday when I picked her up from the airport was, Matt, what stock should I look at? Now, she hasn't asked me that for 6 months. Okay. She's looking to put a little money to work right now. I asked her time horizon. She said her time horizon was 5 years. She has 5 years in investments before she wants to start drawing down and just retire and go to my mother's beach, which might be a beach on any continent in the world. Who knows where my mom wants to go. But what is the one area of the market I told my mother to look at? What do you guys think?
So
one
5
sector.
year time horizon.
5 year time horizon.
She's not going to do any.
Now, I told her I would take a detailed look at her portfolio. Tyler actually runs her portfolio, so me and Tyler are going to meet on it. But in terms of the one sector, I gave her 3 I wanted her to consider, but what was the one sector out of all the sectors?
I'm gonna say tech.
I'd say tech.
Tech was there. Tech was there. There was no doubt. Tech was 1B for me. Energy. I still think energy has room here, and I still think energy has a lot of room here. I think we got some opportunities coming off these short terms, and I'm expecting some pretty decent earnings reports. So stay with us as we get Exxon next week. There's a lot of opportunity coming off these lows.
Yeah, I mean, coming off the lows, if we can get some good themes developed, and I think there's a good chance, like you said, Maddie, that we do. Just hey, don't go crazy next week, energy stocks, right? Let's get through, and then let's start doing it because
the big week in earnings is 2 weeks from now.
Yeah,
for energy.
yeah. So you got the huge names, right? The Exxon, Chevron, I think are next week, but then you got the other pretty good sized companies that kind of follow through that next week. So, but yeah, definitely something to keep an eye on. I could see why you chose that.
Well, Buffett buying Oxy yet again for the 14th time in the last 14th weeks. That was fresh in my mind when I did say it.
Sure.
But tech was right there with it too. Tech and energy for me. You know what I didn't say, Frankie? Comms.
Yeah. But that just must mean it's time for comms, right?
Yeah.
I'm gonna start reverse psychology you communication, see how that works.
All right, Chuck, you send us out there, brother.
Listen, markets are gonna, interesting markets to say the least. Bulls have had a little good run. Certain areas of the market selling off. Those technical patterns on the S&P, though, they remain holding, and as long as they remain holding, the market has had a change of characteristic in the last 5-6 weeks. Whether it is from a technical perspective, whether it is from an earnings gap up on certain stocks, it is not. Is going to be interesting, and I think next week is going to be a really big tell with the Fed meeting, and with that slew of earnings reports. We're going to get a GDP report. It is no shortage. It is going to be a massive week. That is 3 massives for those counting at home. But stay with us in the halftime report. We're going to get to work here. Doing our scouting reports, breaking down, finding the little pigeonholes that don't have earnings the next couple of weeks. Matt, what are your final thoughts for the team?
Yeah, I mean, it's been about time for the Bulls to come back into the market, no doubt about that. But we got some road to walk here with earnings next week, no doubt. Number one thing for me next week, though, Would you say it's the Fed, or would you say it's the combination of Apple, Google, Microsoft, Amazon, that the generals reporting next week is basically what's happened? So what's more important for the market, right, coming into next week in your guys' estimation? Is it the Fed with perhaps the largest interest rate hike we've had since the 1980s with 1%? Most likely it is 0.75%. Still very, very aggressive interest rate coming out of the Fed next week. Or is it the generals reporting earnings? What's more important to the market next week? What do you guys think?
For me, it's the generals, right? Like the S&P is in a really nice potential pattern here, and if the market wants to bid up the generals, we've said this a million times in 2022. The market cannot climb without tech, and
Needs
the
it.
general
Yep.
it can't. It just can't.
It
And
can
the generals
stabilize, but it can't
climb.
form a
Yeah.
bullish uptrend. No.
No, and so how the market responds to the generals, and generals make up a huge percentage of the market. They make up a massive percentage of,
Yep.
of tech. So how does the market respond to those the generals? And that's going to be very, very telling for price action. So for me, the Fed's old
What about you,
news.
Frank?
I would agree. I would agree with that. I mean, I think both, is the right answer, but since you're picking, I would agree with Mark there. I have a better question for you, Maddie. Am
Yeah.
I going to complain more or less about earnings next Friday?
Oh, that's a tough one. The generals are reporting next week. I hope we are complaining less about earnings
I hope so too.
because we have positive response out of the generals, and it's 130 companies that we don't have to worry about earnings the next week.
That's my goal.
Right.
That's my goal.
Right. That's
I hope
our
you're right.
goal. I would have to agree with you guys. I think it's the generals. The Fed is, I don't want to say the Fed's secondary because everything is so important about the central bank monetary policy, the increasing of interest rates, but we kind of already know it's either 0.75 or
Yeah,
1,
we know. Yeah.
right? We kind of know. If it's 0.75, you'll most likely see a little upward movement in price. If it's 1, you might see some selling. But in terms of the generals, man, we got a market showing recovery analysis. We got a market showing double bottoms. We got a market pound like that is trying to pound resistance. And for this to continue, I don't think it's on the backs of what the central bank does. I think the central bank's a joke, quite frankly. I think it's on the backs of what these companies do next week. And so for me, I think earnings does trump the central bank next week.
Yeah, I know. Whatever it is going to be busy next week, right?
Yeah,
Really
big
Busy
week.
week. Busy week.
Well, and it's a busy and important week, not just for next week, but moving into the future. Having an understanding of everything coming at us next week can certainly help us understand, how this market's going to handle the next few weeks.
Yeah,
Yep,
no,
absolutely. It'll be a fun one. It'll be a fun one.
Someone had the audacity of knocking on my door.
Oh man. I mean, oh, wow, man, just terrible behavior. Somebody knocking at your door, bro.
Not cool. Not cool.
But
they obviously don't know any better.
They do not know better. Listen, that's what beauty of the headset is. Like, if you want a pro tip, I'll give you a lot of pro tips in trading. If you want a pro tip to avoid salespeople, answer the door, just point to your headset.
I do it all the time.
Yeah.
Answer the door like,
Pandemic gave us a gift on that one. We gave
Yeah,
us a gift on
when I would do that in 2019, I would do that, and they'd be like, "What is that? What are you doing?" Now it's just like, "Yeah, I get it, bro. You're
Nope.
good. You're good. You
Yep.
handle your business."
So everyone, have a wonderful, wonderful weekend. We're going to get hard working for you over the course of the afternoon, finding you the best setups that we can from both the bullish and the bearish perspective. And if you need anything at all, email us at team@tackletrading. We appreciate all of you. Have a wonderful weekend.
Later,
See you
team.
next week, team.